In today's video, I'm going to explain to you the meaning of a candle because a candle always tells you a story. And it's important from the very beginning that you simply understand what that means. It's simple, but it forms an important foundation for your trading. And just like with a house, if the foundation is already crumbling, the whole project is very likely to fail. And that's why we make sure to counteract that. Let's get started right away. Here you see two candles displayed. It doesn't matter at all which time frame, which period, whatever. It's simply a bullish candle and a bearish candle. Bullish means upward, bearish means downward. For you, the candle might also be red, just so you know. As you can see, with a candle, we always have a body and one or actually two wicks. You could also call them shadows. And they're not just there by chance, but of course they have a meaning, as you can already see here in this graphic, which was created by Felix. Thanks at this point. With a bullish candle, if we focus on this example now, we see that our opening price, our open, is at the bottom of the body. This here is our opening price. The wick below marks the low, the lowest point. And of course, as you might have guessed, the wick at the top marks the high, the highest point of this candle. So, if you're now wondering what high, what low are we talking about, if we switch to the 1 hour time frame, for example, and this is a 1 hour candle from 2 to 3 p.m., then at 2 p.m. the candle had its price here, its opening price during this 1 hour from 2 to 3 p.m. The lowest point of the price was here, the highest point was here, and at 2:59 p.m. or even 3 p.m. the candle simply had its closing price here, so it closed here, and that's the story behind a bullish candle. For a bearish candle, it's actually a bit different. The opening price is right up here at the top of the body. The high and the low are, of course, the same. So the wick downwards is the lowest point, the wick upwards is the highest point. So we open, we form the high, we form the low, and then the price closes again down at the body. And that's the story behind a bullish and a bearish candle. We can also take a look at a few more examples. For instance, here's the story of a candle, how it might look. As I said, this is just completely arbitrary. So don't put too much importance on it right now. Just so you can see, if this is a higher time frame candle, then you can see that on a lower time frame, this candle would be formed like this. We open here, we form our low, we form the high, and then we close this candle again. This is how a bullish candle could look on the lower time frame. For the higher time frame, it's the same thing again. We open and form our high. Then over time, we go down and form our low. And then we close, so in this case here, at this point. And on the lower time frame, this would now be a bullish candle. Don't let yourself get confused. But nevertheless, on the higher time frame, this candle is bearish because the price has fallen overall during this period. Let's look at a daily candle on the lower time frame so you might understand more precisely what we mean. As I said, you can already see one day, that's the daily time frame, and this here is just a candle we're using as an example. We can already see a bullish candle that opened here, formed a low, formed a high here, and then closed here again. What could that look like? As I said, you can already see it's about this candle here. Bam, bam, bam. Use this arrow as your guide. And here are 1 hour candles. In other words, this daily candle would look like this on the 1 hour time frame. We opened here, you can already see midnight. Then you form the low, reach the high, and then close again. That's how it would look on the 1 hour time frame. Two more examples for open high, low close, and open low, high close. Basically, that's nothing more than the meaning of a bearish and a bullish candle. Here you also have the 7 o'clock to 8 o'clock candle broken down here, and the 8 o'clock to 9 o'clock candle broken down here as well. And here again you can see 7 to 8 o'clock, this candle is meant to represent this time here. We open, form the high, form the low and close again. So as you can see, we open at the beginning, form the high, form the low, and then we close again at the end of the session, which is important to note. Exactly the same then for the bullish candle. So an open, low, high, close. We open, form the low, form the high, and then we close again. Close. Open, low, high, close. It's simply the order and a little abbreviation for a bearish and a bullish candle. So, open, high, low, close is considered bearish. Open, low, high, close is regarded as bullish. So, this is actually a very simple topic, or rather, an easy and straightforward topic to explain. If you still have any questions, or if there is anything you did not fully understand, just post it in the questions channel and I will do my best to help clarify anything you might find confusing. Tag Fawn in there and you'll get a quick answer. Otherwise, I hope the video was very clear. Take a look at the PDF, watch the video again if necessary, and then you should quickly understand the meaning of a candlestick. With that, see you in the next video. Bye.